here's the first thing I would say is I found is a lot of people in general in the markets, they buy and hold in their mind, but it ends up becoming buy and hope. And there's not a really solid plan or principles behind the buying or the selling. And one of the stats that I found on Binance.com was that 90% of crypto traders end up losing money. And so after being around it for a little while, we see how easy that is to do, especially we've seen what happened recently in the altcoin meltdown, where a lot of people were doing really good until they weren't, right?
Yeah.
And that's easy to have sneak up on us in the stock market or crypto market, certainly. And if that's happened to anyone, one of the things I'll say is that the market does sometimes charge expensive tuition, right? But if we use it as a learning lesson, then we can become significantly better over time and really start to what we say compound gains and not mistakes. So one of the key principles here, just it's very general what I'm going to put up here, but it's a term we call asymmetric leverage. What that means is we want to limit the downside, but position ourselves for unlimited potential upside or big upside. And so we could say we're really smart when we hit that big upside, or maybe we could just say we're lucky, but we want to position ourselves to get lucky. But when we're wrong or unlucky, we want to really cut that downside off initially and not let the market really be able to dig into our account, because big losses are very difficult to come back from mathematically, but also I'd have to say emotionally, because we have to protect not only our financial capital, but we have to protect our mental and emotional capital if we're going to survive long enough to really get the goals and the dreams that we have for being here in the first place.
Well said.
So let's put some math to that. Okay, look, if you lose 1%, 1% gets you back, 5% gets you back if you get 5%. But once you're past 10%, the losses start to work against us exponentially. And if we ask, hey, I'm already down, what's another 5% loss from here? Well, you can see based on the math of this chart here that every 5% starts to really work against us. I mean, if you're down 50%, what's another 5%? Well, now it takes 122% to get back to even. You see 60% takes 150, 70%, 233, 80%, 400, right? So it's very hard mathematically to come back from big losses. And while it's hard to do, when we're down, it's hard to sell and get out. But if we have a really clear plan when we're not emotional and we avoid the mathematical impact of big losses, it's significantly easier to compound gains when we're not digging a hole. And so at some point, we have to understand the mathematical principle here, and we have to cut the downside off. So Snake, one thing we've talked about since I've known you is we talk about stage analysis. And so it's such a simple concept that it's often overlooked. And we've adapted this to crypto very well because crypto is very fast moving. And sometimes we have to look at different moving averages and different time frames. And so the concept here is very simple. If we take a significant moving average, maybe for a larger cap, that's the 10-week SMA is one we look at. For smaller cap, we found that the 20-day EMA is probably the one for all coins to use. Maybe even the 4-hour 20 EMA if they're a younger coin.
Right.
And we can see that when that moving average is trending up, oftentimes there can be a range that stays above that moving average for a very long way, a very big move. And we call that stage 2. And that's where we want to be. In stage 1, we're losing time. In stage 2, we're building wealth, we're building value, we're accumulating gains quickly. And in stage 3, we're also losing time, but stage 3 is where we see the topping behavior. And you can see in my slide, I drew some volume bars there because one of the characteristics that we see in stage 3 that is different than stage 1 is we see really big volume. When sometimes we see these blow off tops or this large buying around that time, and that becomes the liquidity that in crypto, they might call them the whales or the large holders, right? Or the institutions in the stock market. They're dumping into that often retail buying or frenzy to get out of their positions, because those big positions require liquidity to get out of. And stage 3 has characteristics of when that liquidity is there and when the high volume selling starts to happen. And we see volatility there. And often we see the moving average roll over, and we see a stage 4 begin, where we see a trend below. We see a range below that moving average. And we might see a big rally up to the moving average or even above that moving average, but it often can come right back in and just follow that trend line, and it can go a long way down. And we showed the math of why we want to stay out of that, but there's no reason to be in stage 4. There really isn't. The risk reward is working against you. All bad things happen in stage 4. And this is so simple, but yet it's so powerful and often overlooked by so many traders, either in the stock market and especially in crypto. And I would say that many people that were following some of what we were teaching here recently, we were out of altcoins weeks ago. And some people might think we're geniuses, but we just have good rules. I mean, we've been talking about this well before it happened, and applied the rules. And for a lot of people, it saved them. For some people, it didn't, but they're saying never again, because now they see why this can become so important when the market sneaks up on us and can become a stage 3 and a stage 4 very quickly. So along that lines, let me put this up. This is Game by Virtuals. Yep. It was a very high flyer that some of us were talking about. And you can see that the red line is actually the 10-day EMA. And you can see how that really was a stage 2 above that short-term moving average. And we see the big volume there, and then it rolled over and it went down. He said, hey, let me buy the dip, right? So if you, this one would have been maybe we used the 2 close below the moving average. This one was respecting the 10-day EMA. So that would have been a good rule for this coin. But hey, let me buy the dip at 50%. Okay. And that might make sense. And it even came right back up. But as you can see, it came up above that downtrending moving average and rolled right over it again. And then we see another 50% dip from there. Well, maybe we average down, right? And we buy that again. Well, look what happens. We have another 50% loss. So which buy the dip should we buy there? Probably none of them, because they're in stage 4. And we can see right there what we call a falling knife, right? Beware of the falling knife. It's a dangerous sport to be in. And this chart really brings that to life. But there are other examples as well, isn't there?
I mean, pretty much 95% of the altcoin market at the moment.
Yeah, sure. I mean, this one's a little more because it had that maybe that extra dip there.
That's like a full. I remember seeing Game by Virtuals in our chat, and I mean, that thing was going crazy to the upside. I'm glad you guys got your profits and got out, because this thing looks like it's gone down about 99%. Just looking at the chart, it looks like it returned to where it started.
Yeah, it really did. And round trips are not profitable. But I will tell you that some people I know, we had a lot of conviction about this on the fundamental side, the story and Virtuals and things like that. So this is not something that I wanted to sell. I wanted it to keep going. I want it to be a bigger winner than it was. But the rules saved me. It was not some crystal ball that I have or some magic instincts. It's just, hey, there's closes below the moving averages. They're turning down. We look like stage 3. We're not staying in. And it's not because we're geniuses. We just have some good rules based on really great principles that traders have been using for many years that we've applied to crypto quite successfully.